Hey everyone, it is Evan here from the Trade Risk on Tuesday, August 28th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to kick things off here with the S&P 500 weekly time frame cash market. This is where we like to start our analysis, and you can see bulls are at it again, off to a strong start to the week, up 0.73% as it stands right now here on Tuesday. It is certainly only Tuesday, so plenty of trading left in this week, but off to a good start nonetheless. And if we do close green this week, that will be 8 out of the 9 past weeks. So essentially, almost 2.5 months of trading that we've made progress to the upside, covered a lot of ground since early July. So when we look here at the chart of the S&P 500 on this weekly time frame, we can see there is no overhead supply. It is clear sailing, blue skies above price right now. And if we look at the near term sort of support areas or levels that we would want to pay attention to on the downside, 2872, that was the prior inflection point, the prior all-time highs made back in January of this year. So that would be a level to pay attention to on the downside if this market starts to pull back, and to keep this market as healthy as possible, the most sort of momentum in this trend right now to the upside, we would want to see the bulls defending this area and holding above 2872. Otherwise, we have trends that continue to remain higher. Again, no overhead supply. We do have some divergences in momentum, so we aren't accelerating. We're not rocket shipping to the upside here. We do have a little bit of divergence in terms of momentum, but price rules everything, and it continues to trump all of the other divergences or any other worries out there, and we do continue to push higher. That will eventually change at some point, but when that point is, nobody knows. So it's best not to get too aggressively trying to fight this market right here, and try to participate where possible, and just pay attention to some of those important price areas that we certainly just discussed there at 2872 area. So that is the weekly chart. Not too much else to say about it. When we go down to the daily time frame here, you can see we started off the week yesterday on Monday with this nice gap and go type of session. We opened here with a gap up. That was the lows of the day, and we just proceeded to rally throughout the session yesterday. We had no attempt here to fill this gap, and you can see we just kind of chopped around and really didn't make any progress here on Tuesday. We did gap up small again. This time we did fill the gap and really just couldn't get any further progress. So perhaps this is an indication that yes, the market is tired here in the short term. It has covered a lot of ground, but again, still on a real micro basis here, the structure just hasn't changed. We got a mini sort of fade here, which I guess if you're very aggressive, you could be acting on top of that. But for me, at least this 2872, I think that's the next sort of relevant level for the short-term traders, maybe even intermediate-term traders, holding above this 2872 area. If we look here at the SPY ETF, we also had this little kind of wedge that was developing here. So we had this series of higher highs, higher lows, but the highs weren't that far spaced out from one another, giving us this nice little wedge formation. And we did have that divergence in MACD. You can see based on yesterday's session, we did accelerate higher through the top end of this wedge here. So perhaps changing a little bit of character here on the technical sort of formation, or at least the structure of the market. What's important though is, trend is remaining higher here, and we did get a little bit of a breakout of this kind of MACD lower highs in place. We still have divergence there no matter kind of how you cut it, but it is encouraging at least to see the bulls kind of really pushing higher here. Some may look at that as, is this some type of blow off that we're gonna enter into? Maybe we get some really frothy accelerated price movement over the next couple of days or weeks. That's certainly a possibility. But for now, I think all we can do is pay attention to those key levels and try and stick with the trend as best we can. 286, that would be roughly the SPY horizontal level that I'd be paying attention to. So long as we are trading above 286, I want to be at least expecting that prices are going to continue to the upside or have the bullish bias. If we start to break down from 286, that would give me much more neutral, disposition there in the short term, at least for the S&P 500. Again, no overhead supply here, so clear sailing, no resistance areas to talk about. So that is the S&P 500. If we look at the Russell 2000, you can see this one here, a little bit of an intraday range today, but still structurally nothing has changed here. I think this, again, chart is really clear. 170, that was the breakout level that we saw from last Tuesday. That was resistance here for multiple weeks, multiple months in the Russell 2000 as we traded below 170, and we recently broke out above it. We are still above it, and until that changes, I think you have to give at least the benefit of the doubt to the bulls here as well. If we started to break below 170, we do it on high volume, we do it on one large sort of thrust, some catalyst that really drops this market, turns this into kind of a trapped false breakout, that would certainly change things. But until or if we see that, you have to give the benefit of the doubt to the bulls here. Finally, NASDAQ 100 also just broke out here above this 183, 182 and change area. This was the highs here from July. Also topped out there in early August. We pulled back, and now we just broke above that to start off the week on Monday. So really, we have fresh sort of breakouts to new highs here in 3 of the 4 major averages. The Dow Jones isn't quite there just yet, but it's not all that far away back from its January highs. So we want to respect that. And again, even though we are frothy, we do see some divergences. Again, MACD divergence, momentum divergence here in the Qs as well, as this has continued higher. It doesn't matter until it does, right? And I know that's sort of a kind of a cop-out statement, or doesn't really tell you a whole lot, but the market can certainly ignore these divergences for quite a long time. And if we do start to roll over, if we do start to break down, then yes, maybe that move can happen fast. This market can correct itself given some of those divergences on some type of reversal quickly. But until and if that happens, again, trend does remain higher here. I would pay attention to this 183 area. If we start to lose that, then again, some signals of caution there in at least the short term. So that is the market environment overall. Not a whole lot has changed. Bulls really just kind of sticking it to the bears here as they have done for the past couple of weeks. Let's move into some other major markets. We'll go to TLT, which is finally starting now to break down a bit. We saw particularly today, it was down 60 basis points here, but we had this gap down below this trend line and back to this 120.8 level, approximately anyway, which is something that certainly could be refined. But if we just drop that out to even smooth it out, we just had this slope that this was rallying above, came back into this 122 area, and now it is starting to break down. Volume was actually under average here today, so nothing extreme here. It is on the bulls now at this point to try and put on a higher low and defend a complete reversal of this nice August rally. But for now, we got some small technical damage there. We'll see what that materializes into. Oil next. USO here, not doing a whole lot this week. It is exactly flat actually on the week. You can see it was down slightly today, but kind of just hanging out here. If we zoom out just a little bit, there's a lot of chop, a lot of kind of sideways trading in this general area here. So really a lack of trend. We have a very short-term trend that is still in place. We got some inflection points here up around this 1466 area. So it doesn't really interest me one way or the other. It looks like it certainly could just move sideways here and frustrate the majority. Natural gas, on the other hand, continues to pull back here. It started last week on Friday. We had this drop below this trend line. It followed through to the downside yesterday on Monday, followed through more today on Tuesday. So it's down 3 days in a row, broke this sort of accelerated near-term trend line, broke through some of this horizontal support here, and it is now in this short-term downtrend. So natural gas was acting well, had this nice recovery. recovery, starting to give some back. Again, it's not the end of the world, just depends on your time frame and how active you want to be. It did just cover, let's see, about 12% in just a few weeks of trading in pretty short order. So the fact that it's given back 30% of that rally, again, isn't the end of the world. Let's see if we can put in a higher low here and get back up towards the highs here from just a few weeks ago. Finally, we'll look at metals. Gold here pulling back today. It did just, kind of put in a little bit of a bounce here. It was about 3.5% off of the lows from just 2 weeks ago, all the way down from 111.20 or so was the low, rallied up to 115. Now it's starting to maybe pull back just a little bit. Again, we had this positive divergence here in momentum for GLD as it was selling off. So again, maybe this needs to come back a little bit. Maybe we get all the way back to August lows here, but at least some small signs of stabilizing, although certainly the bulls have their work cut out for them as this trend, the structure overall is still very much to the downside. So we'll see what becomes of that. I think if this market starts to really carve out a bottom here, you'll see volume pick up and at least this start to move sideways a little bit more. Silver, kind of the same thing happening here today. We had to pull back today. Recently got over the past couple of weeks, it did push itself off of the lows. Didn't get quite a push like GLD did off of the lows, but you can still see some stabilization here, pick up in volume over the past couple of sessions. So we'd like to see in both of metals, if you're a bull here, you'd want to see the lows from last Wednesday or Wednesday the 15th to really hold in place. If we can more or less hold the line here back from 111 in GLD and 1350 or so in silver, that would be at least a near-term constructive sign. But remember, structurally, this is still in a pretty fierce downtrend that has lasted a few months now at this point. So that is everything. That is what I have today in the midweek video. Hopefully this was helpful. Thank you so much as always for tuning in and watching. If you like the videos, you can subscribe on our YouTube channel. Keeps you up to date with all of the latest that we are publishing. So thanks so much. Enjoy the day, and I will talk to you later this week.